Geltrude, a market and business analyst and founder of Geltrude and Company, and Robert Wolf, a former economic advisor to President Obama, CEO of 32 Advisors, and a Fox News contributor. Robert, I want to start with you. So 6 times since 1929, the market has fallen by more than 20%. And in 4 of those times, it's come back in the following year with a 20% increase. Where do you stand, rebound or recession?
Yeah, I don't think we're in a recession. I don't think we're going to go into recession. If you look at the data, it doesn't show that. Jobs have stayed strong. Consumer spending stayed strong. Personal income was strong. GDP was at 3.2%, outperformed all expectations. And so the data is just not showing that. And then on the flip side, William, you have inflation subsiding. You know, gas prices are down, energy prices are down, food, hospitality, and leisure is down. So I think you're seeing a slowing economy as well as slowing inflation. I'm still more concerned on the inflation side, though.
So, Dan, right now, is your money on the sidelines, or are you dollar cost averaging and kind of getting in a little bit every week at a time?
Well, now's the time really to get in. When you think about how the stock market acts, right? People have been buying up stock. The demand has been there for investors through most of the previous year. Now, you still have those same companies now at a discount. So why wouldn't you take advantage of that? That's what the stock market's a funny thing. Things get sold at a discount and people are afraid to buy. If you believe in certain companies and your investment strategy, you stick with it and you keep buying.
So, Robert, it sounds like despite the headlines and kind of the negativity associated with this, a recession year or not, Dan's saying, listen, put your money in because this is an opportunity to buy when these companies are out of favor, correct?
Yeah, William, so normally when unemployment is below 4% and inflation's above 4%, we see always a recession. That's what cycles have shown us. This time, though, with COVID, things I think have changed. I agree with Daniel that there are some stocks and some sectors that should perform well, but in general, I think you're going to have short-term rates because of the government continue to increase rates closer to 5%. So I actually am more skeptical on the stock market doing well in the first half of next year as rates continue to increase. So I may be more sector-specific than Daniel, but the overall market still feels heavy to me.
Well, let me go to Dan, then Robert, come back to you on what those sectors might be. Dan, 2003, people looking at their 401k, maybe you want to rebalance that. Are you going emerging markets, blue chip American stocks? Tell me what you're looking at. Asia?
So it's always difficult to time the market, right? And as a matter of fact, I would put forth and say it's impossible to time the market. When is it exactly going to rebound? So if we knew that, well, then things are a lot easier. So I do believe because the Fed is going to continue to raise the interest rates, there are going to be bargain areas. If you look at, for example, big tech and how much that has come down, like 50% across the board, in some places more. I see opportunity there. I know a lot of people are negative on big tech. I don't feel that way. And of course, blue chip American companies, I think those are always a good buy, particularly the ones that are producing dividends consistently.
Robert, let me ask you the same question. What sectors are attractive to you?
You know, I like banks. Usually they do well in a rising environment, especially if we don't see a recession. You won't see as much default. So I think they do well because their net asset usually does well versus deposits. I actually agree with Dan that I think some of these tech companies have been beaten down more than enough. I would view that as much more of a long-term play. And industrial America, you know, I think it's clear that if you look at some of the things that the President Biden has done with the CHIPS Act and manufacturing, I think industrial America should have a pretty good comeback going forward.
So if we are looking at our 401k and looking at the choices that we have, can either you guys, both of you, give me one thing that you'd be wanting to look at, whether it be a Vanguard, you know, S&P type of fund or something else? Robert?
I would probably still look at the energy sector. I think you're going to see probably during the winter. Energy continue to do well. I think energy companies have made so much money. They're going to definitely make sure that they pay dividends and benefit the shareholder. Even though they come a long way, I think energy companies will continue to do well in this cycle.
Dan, 10 seconds. What do you like?
The key in 401k is diversity. However, I do agree with Robert. Energy, great place to be in right now.